Yeah, so like I'll be talking about the major talking points that were discussed in the company calls and how can we interpret them and what do we get an essence of like how the company will be moving forward with all the guidance and stuff, right? Yeah, so let's get started. The Meghmani Organics. So it's an organic based company, so like it's a chemical company. So I'll just briefly take you through the company's website. So just give me a second. So like this is the company's website. So as we can see, the company is the third largest white fertile cyanide pigment manufacturer globally. It has around 9 integrated sites located manufacturing facilities. And so basically what we are interested is in the crop protection and nutrition pigments and titanium dioxide, which is the company's core businesses on which they actually earn revenue. And if you go to the screener.com, so screener is a site where you can get I think like 80 to 90% of the information about any company. So we can see that the last 5 quarters of the company has been loss reporting, and the the operating margins were also not very quite good as it pretty much come out of plateau. And this quarter they have reported of 1% of operating margin, not quite good, but we'll take that. So will be anything about the con call or transcript of the company con call about what the management has to say about the future, right? Yeah, so let's get started. Yeah, so coming on the earnings conference call of the Meghmani Organics. So we just train. So like I have read already the report and I have highlighted the important one. So the company says that the titanium dioxide segment has not stabilized and the plant is running complex. We call to the production stabilized as well, and we have received the approval from few and new customers in different categories like ceramic, and we are also expecting term anti-dumping duty on China in the quarter three. So this is one of positive highlight that the company has given that they they have received approvals from many customers and they most likely will be supplying, which will in turn increase the revenue of the company in the subsequent coming quarters. And although the dumping thing that we were talking about earlier, due to the China, like due to COVID, so a lot of chemical or organic chemical companies had stock piled up, which were, was not able to sell during COVID times, and inventory piled up was sold at such steep discounts by the Chinese suppliers that other players in the industry were not able to compete, and especially because of that, the Indian chemical industry was suffering a lot. But now we have seen that the stock compiled, the inventory has come down, and we are expecting a demand recovery in demand. And also coming on the like since we have received approvals from the new customers, and then we are also expecting anti-dumping policy on titanium dioxide from in around quarter three. So we can expect a good year ahead. And then in the crop production segment, the production was nearly up 20. Sorry for that. Yeah. So the production was up by 20% year on year, and capacity utilization stood at 73%, which is a very good number. And the company is expecting to keep the utilization above 75%. And if we go down below, we will also get to know that the break-even point for the company is like 70%. So it's a pretty good metric. So this is also a second highlight point. So yeah, and for the pigment segment, it was up 9% year on year, and the prices were stood at 45%. Yeah, so for this, the bump is not so much good, but again, it's an improvement from the company's side. So that, yeah, they are gaining control over their assets, and then it can come back again. Uh, so I think this is like the EBITDA is 9.4 positive against a revenue of 22. and while the rest last year it was 8.4 negative. So it's correspondingly the company has been on track to become profitable again, and they are expecting a double-digit respective growth which they have earlier demonstrated. And since it's a small time company, as we say, if the right, market cap is just 2,300 crores. So it's pretty small game. When you're for a small cap company, our double-digit growth is not a surprise that we can expect. But we are expecting that our small company should provide at the fast double rate rather than a very big company. So yeah. So next again, some Mr. Ankit Patel. So let's see click who Mr. Ankit Patel is. So Mr. Ankit Patel is the chairman and management director of Meghmani Organics. So he also sees that the demand is picking up from different markets, and overall since demand is picking up, so they expect a very good quarter. And as we have seen from the quarterly reports as well, so the trading margins have come at 31%, which were in the range of -5 to 2% or 0% in from the last quarter. So we can expect a healthy year ahead. And if you also see the stock price of this chart, the chart has been rising from this channel, and it has come from like 80 to 90, approximately around 14 rupees return on 80. So it would be around like 20% return we can see in the last 1 month. So that's a good sign. So that too, people are encouraged that if we get that, yeah. So it's also getting a positive response from the Brazil market, and for the majority of the since that we were discussing earlier that the inventory levels have become reasonable, so they are expecting good demand from Brazil as well as it's one of their good markets, and they're also expecting that when the demand will pick up, the prices of the products will also pick up because the prices right now are not sustainable for any industry. So there's a very good chance that the price will increase going forward, and which will in turn increase the profit margins, and again we can see a good trend in the stock price. Again, friends, it's not a recommendation to buy and sell. Please do your own financial analysis or consider or financial advisor. We are here just to learn and what the company or its management has to say about the company, right? Yeah. So moving on. So on the product side, also the company earlier COVID-19 was expecting a lot of approvals. They were going to introduce a lot of products, but due to the COVID-19, everything got delayed, and they were not going to able to focus on it. But now they are anticipating that in the next 2 to 3 years, they'll get a lot of different approvals for the different markets and new products. And now also they have launched around like let's see 1, 2, 3, 4, 5 products they have introduced, and there are a lot of many more products that are in the pipeline as well. So we can expect a stronger product portfolio, which can again contribute to the increasing revenues. And they also have a new plant which is kind of under the manufacturing of the new product, these new launches. So that is not running at its full capacity right now, but when it will run as its full like full like it will run its full capacity. So we can expect a 200 to 300 revenue jump from that as well, and please seeing this revenue so for a year basis, so it's like around 1500 or so. So a 200 jump would be a good number. There is 10% or a double digit growth running already. So yeah, so like that was our third point that we saw. And so again, very so Mr. Swenam Khilani asked like what are the expectations and recovery in realization as well, volume or realization. So the company is focusing on realizations rather than the volume because profitability is more important for the company right now. So it's not just focusing on increasing production because it can lead into again a down cycle of inventory buildup, and then it can bust them or lead to 2 to 3 consecutive bad quarters. So this is one of the again good things that the company is focusing on profitability rather than volume realizations because it's not a volume game because and then the company has also spread a good capex of 1100 crores over the projects, and it's expected to generate a lot of revenue because let's see like in the crop production business that we saw like it's uh we see like how many percentage of crop production that is leading the world. Let's see the data. As a crop nutrition business and business services and technology studies also needs 70% share in total revenue mix. So they have around 400 crore investment in this, which will create 800 crore plus revenue, and the crop nutrition business they have spent around 150 crores, which will generate around 1,000 crore revenue if utilized at a full capacity basis, and then the titanium calcium oil, which is also again new product. We invested around 600 crores, and it's a phase-wise generation, so it's expected to generate revenue of close to 2,275 to 300. So overall, looks good, right? And the company has also taken up debt, of course, for the capex you have to take up debt, right? So again, this is my fourth good point because the company has done a lot of capex, like they have built a foundation in the last 2 years, which will help them grow over the next few years. So this is a very good point. So I'll just observe this. So the company has taken a debt of around more than 550 crores, in the, which is upfront. So, but the company has also done a repayment of around 173 crores, and they are expecting to pay down a similar amount the next year as well, and then it will expect to bring the target debt substantially low over the next 2 years' time. So it's a good highlight from the company that they are not focusing much on debt and they'll just pay off the debt from whatever revenue they'll get over the next 2 years. So the interest will so the interest cost will also come down and it will be a good highlight for the company. So this will be a number 5. Yeah. So so the rate of interest Mr. Pradeep Rawada. So it's in the range of 5 to 6%. So I think it's a pretty decent rate of interest, and they're expecting it to even go lower because they are expecting, have seen that the debt is actually peaked here at the moment, and when the rates are improving, they can expect cut down the rate as well to the floating interest rate. I don't know like why the people think that the interest rates will come down, but I don't know like after September what will happen. I read somewhere else also like after September they are expecting again Fed will cut rates, like the Fed means the body, Indian interest body, right? But let's see what they see, right? So yeah. So the first quarter results were out and the company was again in losses, right? But they expect that they'll be on the path of profitability and they will very good chance to be profitable um, in the quarter two onwards. So we in the next 90 days we can observe something that will be good for the company and the price will run up. And talking about the titanium dioxide, which was not running at its full capacity, so it will be running at about 70% capacity, which is a good number. because that's the one of the break-even points for this plant. And since it's a new business and to realize its full potential might take some time, but who knows? And the company is not looking at any of the demerger as of now. So this is a like the company is focused on for two. Next quarter we can see that. Hmm. And anti-dumping that we saw. So yeah. So hi, yeah, this was it.